just after 3 p.m. April 25th. We're almost done with April, but next week on Wednesday, one of the craziest months I've seen since COVID. Talked about this morning in some live sessions. I've got some winners this week. It's obviously better than the market dropping and thinking that the sky is falling. But took some winners on the QQQ, winners on the SPY. Had a full trade winner on copper this week. Had another couple winners on SPY. I did decide to roll Tesla. I had a 257.50 call today that would give me about $1,000, and I'm rolling it out for another $3. So if Tesla stays above 257.50 for next week, May 2nd, then I will keep about $1,300 on 500 shares. So that should be around $6,500. So 1,300 times 500. Oops, I guess 1,300 times 5, $6,500. And that'd be a nice little income flip on Tesla. I might roll it if it continues to head higher, but we're running into some resistance around the 280 to 290 zone. Took a winner on Netflix, had a winner on Tesla for a ratio spread, an earnings play. Took a small losses, like literally 10-cent loss or 9-cent loss on Verizon. I ended up looking at Pfizer for a roll, closed out a winner on Apple, watching American Express for next week. Took some winners on Google. I had some bull put spreads, some naked puts, ratio spreads, all closed out for profit. IBIT has been really solid. I've got some profits running there. Going into next weekend, I'll take a look on Monday to close out some trades. What else is going on? I think that's about it. Pretty active week overall. Daily profit play. We just kind of survived the week. It ended up being a negative week. I didn't overtrade, but I ended up losing about $350 for the week. Which is fine. I mean, overall, I'm sitting up for the day about 15 grand, back up into a good like 5% chunk for the year. So year to date, hanging in there, battling the good fight. Here are some of the levels I was looking at this morning. This is a 55.46. I'm watching this 55.50 zone for the end of the day. I did put in a couple of trades. I have a butterfly up here, and I have a bear call spread up here as well. So I want to see if price stays below this, then we'll have a couple more winners to add to the mix today. And I'm totally fine with that. So yeah, lots going on. But how's everybody doing? How's the week? Here is Tesla running right back into this 200 moving average. The last 2 days, Tesla's ripped from 251 up to 287. And, we might deal with a range here. It's going to be close. I wouldn't be surprised. I mean, I would hope that literally like 1 week of bullishness, that's kind of all it's been, is we had a big rip on April 9th, and we had 1 week of bullishness this week to kind of revisit some of those highs. So I would hope that this market can go a little bit higher and longer than just a weak recovery. But I am also still putting in lots of trades, taking profits, raising my cash back up. I was down to about 950 grand in available cash. Now it's back up to 1.35 million. So I'm still watching. And I'm still trying to raise. I mean, if I get this back up to 1.4, 1.5, I'm still going to be looking for good opportunities. But I want to make sure that I have plenty of cash at the ready. So key levels, Tesla had terrible earnings, but I think a lot of the bad was priced in, which is why I took a neutral trade on Tesla on top of the ratio spread was a sign I'm looking to flip it. If Tesla can hang out around this like 260 to 260 to 290 zone, even having a little bit of indecision could go a long ways with my my May expiration, which is a 245. 245 would be assignment if I get assigned again. I don't really want to get assigned again, but if I did, I would flip it for hopefully a third time. First flip on Tesla was for 7K. If next week it stays above 257.50, then I flip it for $6,500, so 6.5K. And if I avoid assignment here, then I'll make another $1,000. So Tesla, for all of its craziness, I could still make around $14,500 in about a month. So it's not the worst thing, and hopefully it's going to cooperate. So we'll find out. But today, let's take a look at the currency heat map, or not the currency, the heat map for the S&P. Let's go FinViz for that. So we've got 50.9% of stocks advancing, 46.2 declining. Some of the big names, I mean, honestly, some of the big names are holding it up. I mean, Google had pretty positive earnings. This would allowed me to close out some of my trades, naked put, ratio spread, bull put spreads, close out for profit. Tesla having a pretty good day. One of the most heavily traded options stocks is Tesla. Nvidia, same thing, but Tesla's up, 9.98%. That's a monster move. Amazon's up a little bit. Meta's up. These are earnings for next week, by the way. Meta has earnings next week, as does Microsoft. Apple has earnings next week. So we have Apple, Amazon, Meta, Microsoft. I don't know if it's intentional that we have the A's and the M's with earnings next week, but April 30th and May 1st, I think we have earnings on both of those, or all four of those. NVIDIA has earnings out end of May. Tesla had earnings this week. Google had earnings this week. Eli Lilly is up. It was actually beat down pretty badly this week, but coming back a little bit. So, healthcare wise, bouncing back in AbbVie, bouncing back in Eli Lilly, bouncing back in Merck. Johnson Johnson down slightly. UNH is at 417. Good Lord. Man, that stock is just getting blasted. Gilead had earnings this week. They're down. Okay, T-Mobile down 11.63%. Wow, that's a big red today. AT&T down to 27 or 26.76 to 2.8%. Intel 19.95 down 7%. I did put on a trade this week for Intel. I've got to put out to May 30th in case it goes lower. But I actually liked the fundamentals on Intel. Let me check the positions here. So Intel. I bought 100 shares and I put a collar trade on with a call at 24 and an 18 put. The put is essentially break even. I'm just going to let this ride a little bit in case the stock goes a little bit lower. I mean, on the price action, we could see it down into the $18 area. So Intel, gapped lower on earnings. They actually came in with top and bottom beats, but gapped lower. So if this is a dip to buy the dip, like a gap lower to buy the dip, I would like to see this thing go higher. My $24 calls back to the 200 moving average. That would give me about $3.04 a share, and I'm sitting on about 1,300 shares of Intel. So all in all, it could be a good trade. I just want to see if we hit $24, $25, $26. That's my upper target, and looking to see if I can just exploit this range. If it holds the lows, gets back to range highs, let's see some $25, $26 Intel. So watching that one. What else? Top to bottom, DTE wise today, I mean, SPX, I got a couple more trades running for the rest of the day. XSP, this one is out to the end of the month. We're up above. I'm actually, here we go. I got some profits. Okay, I'm going to take some profits here. This is a XSP trade. I've got 113% because I'm over the credit. So I'm going to go ahead and take this trade out. I could wait until Monday to close this and maybe get a little bit more profit into it because we're below 589 and we're above 535. But again, not trying to be super greedy on this. If I take the profit, that's probably good enough. So this is out 5 days. This comes into next week, Wednesday. I'm going to go ahead and just take the profit. It's just over 100%. This one is just over 100%. This one's over 100%. So yeah, I'm going to take those profits. Just less to worry about. So close this one down. Taking hopefully let me try to get 10 cents credit here maybe. That's a bonus trap. If it doesn't fill, let's try 8 cents. Doesn't fill, let's try the mid price at 6 cents. Filled at 6 cents. Okay, so that was fine. Same thing here. Let's go 6 cents credit. Try 7 cents, I guess. Nope. 6 cents here. Come on. Okay, little bonus trap. And this one, April 30th, close for 6 cents. Four. Take my fill. Come on, XSP. What? All right. Well, I'll just get the little 2 cent bonus. This one is still hanging in there with a 520 XSP. April closed out, and April closed out. Okay, good. What else? SPX. This trade's running today. This trade is looking better for the next week, hopefully. If we stay above 52.30, we're trading at 55.17. Box spread, these are fine. Those are all fine. All right, those are box spreads. Next up, Tesla. 118, 107, 118, 118, 118. I'm going to keep the remainder, but I'm taking like a one contract sell call. It's a covered call at 257.50. I went ahead and rolled it out to next week. So these are all current. I'm going to add this as a covered call, covered call, covered call, covered call, and covered call. Okay. So those are running. I still have some ratio spreads that are showing some profit. Well, they should be. This will depend on another week or two. I don't mind trying to do like another flip. These out to May. This one's actually showing a pretty good profit. So max profits around 284. I'd like to wait a little bit longer. I don't think we're necessarily going to drop to 195 on Tesla. So these are some good looking income trades. But watching, 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 watching. Obviously, I'm pretty active in Tesla right now. Bull put spread, watching. This trade is 390. I mean, this is up 80. I'm gonna take profit here. So I've got a 40 wide spread, and I'm up about 88% of it. I'm just gonna go and take it from a 396 down to about 350. So this should be trading for like 30 to 35 cents. I'm gonna take this one off. So closing, hopefully 48 will fill. Give me some liquidity Tesla, 49. All right, that filled for, that's a 396. That was a winner on Tesla. 396, closed it for 49 cents. Not a bad winner there. Same thing on this account. Another one up 350 bucks. Close, hopefully 47 will take. And I'll get some nice buying power back as well. 48 cents got filled there. This one up 700 bucks. Now we're talking. Now we're talking Tesla. Close this one down for 47, 48. Okay, it filled there. That was a $700 winner. I'll take it for sure. Same thing here. This one is a 190 by 130. Sit on that one. Naked put 190. Still going to sit on this one a little bit longer. Bull put spread needs some time. Bull put spread needs some time. These are out to January. Okay. So closed out here. This one's still running. Still running. Still running. Still running. Still running. Okay. I think that should be good to summarize. Tesla took some profit on a 115 by 75. Man, that's crazy. I mean, I think I got in that trade like right around this bottom. So either right in these lows. Let me go to Tesla. Sorry. So right around these lows, right around like 220, I put in that trade. It was about a 40 to 60 day option, and just time decay worked beautifully. So that was, I don't know what the IV was at this time, but it must have been quite high, whether it was this first jump or this second jump to retest the lows. But that was a good spot to get some fat premium. So I'll take it. Yeah, good, Dean. Yeah, we had two winners today pretty quickly. SPX this morning was pretty solid. It was actually one of the only days this week. We did have two winners on Wednesday. Today was like the easiest day, and prices were pretty cooperative until about 11:50, and then we had a nice little run. SPX went up from like 54.85 all the way up to 55.25. That was a decent little streak as far as direction goes. But this morning was, down, up, very quiet from 5,500 down to like 5,460. That was perfect for a little 2 for 2 today. But if you look at the chart for the week, I was telling traders this morning, I mean, this was certainly one of the more challenging weeks. I could go back a lot of these weeks where it's like, that was easy, that was easy, that was easy, that was easy. This was all directional. This was all directional. And we still end up taking a win there. This is still a loss. This was a win. This was all directional. That was a loss. And then today was a win. So all in all, I think I'm going to finish the week with this one. It was -2, +2, +2, -2, +2, and then some sprinkled in winners. I think I ended up adding 4 extra trades. So on the loss column, I have 2, 4. On the win column, I have 2, 2, and 2, 6, and then added in 4 trades. So I actually had 10 winners on the week with 4 losses in daily profit play. Like I said, it wasn't enough to get me positive for the week because these 4 losses are very rare, number one. And number two, they were a little bit bigger than my wins. So I ended up losing about $350 this week. But last week, all profit. Week before that, took 1 loss on it would have been Monday morning, and then winners, 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 winners. So like another like 8 for 8, or I think like 7 for 8 the week before. So anyway, I mean it's still fighting the good fight as always. But nice work, Dean. All right, what else is going on? Just checking the portfolio, combing through Tesla. I'm going to look at these 111s out to the first couple weeks in May. Hopefully, we'll hang in there. My covered call, I still have a put out to May 9th just in case if the market's going to dump aggressively. I don't know if it will or not. Probably not. But Tesla is fine. HIMS. I took a position. I'm actually doing a class on this around 4 p.m. My Project Options Edge. We'll talk about this trade and a couple others. I put out some new trades this week for that service. SLV doing pretty well, up about $11,000. And I've got some calls in here. So covered at 33.50, covered at 34, diagonal spread between the 15 and the 34. I mean, all of it looks pretty good. Silver, let me go to silver here. So the core, it took a trade on Micron as well. So I had winners on Q, SPYs, Copper, SPY, Tesla, lots of trades on Tesla closing out for winners. Netflix had a winner, Micron had a winner. Google had multiple winners. So all in all, I still fought the good fight this week. Let me go to SLV. So I have shares that are covered. So this is my covered call. And this is out to June. So 33.50 would be a measured move and highs. I've got a diagonal spread that's up around $500 right now. And there's, again, out to June. I did a $15 long call out to January 2027. So I'm hoping that 2025 is a good year for silver. And even through 2026, hopefully it's a good year for silver. And this has lots of upside potential. So, I mean, I've got 3 contracts in. 13.89 is my debit. And I've got a max profit of around 6. It'd be, I guess, $19. So it'd be $5.11 times 300 contracts. So about $1,500 if I'm right on this trade. And there's still more upside here. Also, I'm going to continue to sell against it to let that reward to risk continue to grow and lower my debits a little bit. Bull put spread. Right now, this is up. I mean, I've got about $450 worth of profit here, and I'm up around 72. I just need to see if silver can take off above, if it gets above $30, this trade looks pretty good pretty quickly. And then the covered call is for my 600 shares. So I've got some exposure between gold, silver, Bitcoin. All are doing pretty well. CEF, PHYS, all doing pretty well. All in all, I mean, I keep going through this, but I don't know if the market's going to go crazy high. I think we're running into some pretty heavy resistance. Like I said, though, it's been nice to see the market at least responding. But for the last week, let's go to the weekly candles here. All we really had was a 1 day. This is not an exaggeration. We had a 1 day surge on April 9th. That is what this green candle is from. That's April 9th when Trump tweeted that we're pausing for 90 days. That was a 1 day move. And then after that, it was down and then back up and then down and then back up. And so this is the first week that the market is actually trying to stage a rally. So do I think this rally could continue? I do. If we're not getting an immediate rejection right here, and I talked a lot about this yesterday, with key levels. I talked about this in my Crash Insurance Masterclass yesterday. So my point is, like, if we don't have an immediate reaction here where the market's going to reject, let me make this a little bit thicker. So this level, if we don't have an immediate rejection here, then this market can still get up into the 200 moving average. This can measure into a symmetry move, which is around 5,700. I would say this is potentially a rejection spot. And if the market melts up even higher, which I don't know if it's going to, it could. And if it does, there is a cup and handle measurement all the way up to 6111, which is right back up to all-time highs. So how does it play out? I don't know. I mean, obviously the market next week can be like, well, bears say bye-bye. Terrible news comes in over the weekend. Who knows? But I'm hoping that more than 1 week of recovery. So a recovery into this level would be pretty fantastic. And then we'll see if the bears are actually going to show up. Because right now the bears can show up, but they haven't yet. If they don't show up and the market drifts higher and melts up higher, then this could be a little fight zone around 5,700. There's all sorts of ways to build the structure where perhaps this is putting in a larger bottoming pattern, and any pullbacks are still seen as opportunities to buy the dips, and this market climbs and grinds its way up to all-time highs. And all this is a terribly disruptive, politically stupid blunder that could have been avoided. I get that the market, was eager to have a correction. I think it needed to happen technically, but not with the market seeming like things were breaking in order to get a 20% correction. But I guess it's what it takes. You got to have like crazy risk off. I saw the print from AAII sentiment this week, and it's 9 consecutive weeks in a row where the bears have a 50+% bias. Again, this is the wall of worry that we're seeing. If the market continues to climb up, that is every investor that's so bearish that is just going to watch the market melt up higher. So that is the pain trade. Like the pain trade is when everyone thinks the market's going to go down, the market tends to find a way to shrug it off. So I think that the market also has probably learned a lot, which is ignore some of the crap that's coming out of Washington, D.C. So hopefully the market does a better job of that moving forward, because it did not when it was very reactionary that first part of April. All this anxiety with Liberation Day and what happened after, and then the bond market broke and blah, 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 just continues to be messy. But now I don't know. I'm not saying the coast is clear, but next week's price is going to be really interesting. If there's any follow through, then that's probably a good sign to continue to what I've been saying now for weeks is to de-risk, to deleverage, take off some profit. If you were a premium seller down here, take off some profit. You're going to have lots of it if you were brave enough to put in some capital while this market was dumping as hard as it was. Lots of good trades out there. But it doesn't mean I want to sit and hold this to expiration. A lot of my trades that are, options are 70, 75, 80% profit. I'm going to take a majority of those profits. Right? So good stuff. All right, that's where we're at on the SPX. Go to the NDX for Nasdaq, same type of thing. This is on the right-hand side of the trend line, but I acknowledge like this support is not really holding as resistance yet. And so perhaps this is another melt up into the 200 moving average, maybe into this measured move, which is a low, high, higher, low, higher, high. If it goes higher than that, well, there's a pullback there and we go right back up to highs. Is it possible that now from end of May, or I'm sorry, yeah, I guess end of April into May into June until the July deadline of what our trade war tariff situation looks like into July, is it possible that this market does everything it can to recover? Maybe it does, right? And then July to December is like phase 2, second half of the year. Maybe it's a clean slate and the market has no idea what to do. Maybe the market comes all the way back down again, right? If we go higher, we're going into a bubble. If we go back down, this is no different than 2015, 2016 with a monster range, and it's not going to be fun if that happens. But I will make sure that I'm not going to be overexposed and over tilted to one side. Okay. Joyce says just opened some insurance SPY June 30th, 530 by 520. That's on the SPY. Let me take a look here. I mean, that's fair. 530 by 520, not bad. Definitely not bad, because if we come back to fill this gap, Joy, like that trade's gonna be pretty good. Yeah, not bad. I like it. I mean, I think that if we do reject here, then this gap to potentially the low we had from Monday, this could be area 1 and area 2 that price could fall down towards. We also are on the backhand side of this trend line, which would be connecting, and this is a pretty key spot, right? Support from April, support from August, and we broke that support during Liberation Day. So coming right back to that level, I could see the market getting, a bit messier here and having some rejections. I just don't know if the rejection is going to be, oh boy, here we go again, or if the rejection is going to be just a little bit of a pullback into a gap fill and the market uses that to rally. It like to be determined. But if you see your 530 by 520, hopefully you paid very little for it and you've got a nice reward to risk profile. And if it offers up like a 100% profit or 200% profit, take it. I think it's a good trade. Not bad. Okay, that is the SPY, the Qs we did, NDX we did. Let's take a look at the Dow. The Dow has not, and this is another thing that might also allow the markets to drift a little bit higher. The Dow has room to get back up to this 200 moving average, and also the Dow is lagging a little bit compared to the S&P and the Nasdaq. Right, this is the April 9 high, And the Dow has yet to revisit those highs. The SPY did, the Qs did, right? But if we can get to these highs in the Dow, perhaps this is enough to also say that, hey, all indexes are performing better. Let's look at the recovery on the Russell. The Russell at 193. Do we have what it takes to get back up into this cluster at 199 or 200? I have a covered call at the Russell for, I think I took $5 on the covered call. Maybe it was $3. Let me check. So let me go Russell. $3 on the covered call. So I have 1, 2, 3, 4. I have 400 shares of the Russell. If they get called away for $200, then I'll make about $2,000. But if it doesn't get called away, then I'll just continue to add more covered calls and kind of wheel through it. But if it hits, I mean, this is a $200 alert. So if it gets hit, great. Is the Russell going to be able to form something like this? Does the Russell come all the way back up into this zone? Is this a head and shoulders pattern, right? Is this a chance for small caps to still perform better? Maybe. But I still don't know because yields might not do what we expect them to do. Fed starts cutting rates, yields don't go down. Well, that may not help the Russell because a lot of those companies need that cash runway and need the ability to borrow, right? So anyway, that's where I'm at. So 2.36, yeah, good. 3 to 1, that's awesome. Yeah, that's a good trade. Okay, VIX down to some fresh lows. We're at 25.43. Again, pretty happy with that overall. It's been one of the bigger vol crushes we've seen in history, and that has been from the one-day move here. Like that one-day vol crush was the largest on record. Here we are back into the 25s. I don't know if this is going to be like somewhat elevated between like 20 and 30. Maybe it is. Do we come all the way back down to the teens again? Maybe we do. Time will tell. We are still in backwardation on VIX. If you look at the term structure, which means that short-term volatility is way more uncertain than longer-term volatility. The VIX one day versus the move index, bond volatility coming way down. TLT is up on the day. We had some gaps. So we had a gap higher and a fade, another gap up and another gap up. So TLT is actually doing okay from, Monday's low to now. TLT is up around 3.3%. Has that persisted to give us a drop in yields? Let's look at the 10-year. The 10-year for the week, there's Monday. So Monday's high down about 3.4%. So if TLT can inch a little bit higher, hopefully TLT inching higher will bring US 10-year yields lower. Let's see what 20-year did. Same thing. So from the highs of the week, down about 3.5%. Yeah, I mean, it's down about 4% actually on the 20-year. I mean, it's kind of good. However, this is the key level right here. That is the Liberation Day announcement, after market, obviously. And is this going to persist a little bit lower? I hope it does. I hope that it does. It'd be nice to see if bonds can go up a little bit more to show that we're not going to have some failed auction or that yields have to go the opposite way, right? But yeah, something to keep an eye out for. Let's get into gold. Gold, I guess we're getting some intermediate support right around this like 32.50 handle. I'm still not a buyer yet. I mean, I have gold and I've got lots of gold and silver. But this 21 period and this 50 period, I'm looking to see if gold, let me go to a smaller time frame here. Maybe on a smaller time frame, gold. Yeah, this could be pretty good. I like this structure. And this is going to be kind of a hope. But if gold is high-low and we put in a little bit of a flat pattern, I'd like to see if gold can go down. So I'm just going to call a little bit of a measured move here. If gold's going to have any type of correction, something like this. Right? So this is either a symmetry move, and I'll box that in, or this is a break of this level, and I'll box that in. And I'm going to go back to the daily chart because these are levels that I would say I'm interested in buying gold at this blue line or this blue line, right? So they're pretty shallow. I mean, this is in between a 21 and 50 moving average if I buy it here, and this is right below the 50 moving average. I would probably just do trade 1 here. And then if we have a deeper pullback into this 100, 144, 200 cluster, I would say trade 2 is there. But longer term, absolutely still going back to all-time highs. Like meaning I'm going to trade gold with the intention of getting back to all-time highs. Okay? But I still think we have a correction that is likely in play. It doesn't mean that I'm selling gold. I think that's silly. But I'm looking to certainly get a correction that I can buy some more gold, buy some dips, trade some futures add to some of my positions of GLD. Okay, but I've got that measured out a little bit. Same thing here on GC. We'll look to see how it plays out. Watching my moving averages. GLD, same thing. Look to see how it pulls back. Silver, I'd love a range breakout. We have equal highs around 34.89. I want to see a break higher. So, this swing, it still has the ability to get up to like 35.88. We're not there yet. We're close, but this got a big shakeout. I'd love to see like a break and a pause and then another run. If we get an open space here, I think silver can really get some legs this year. And hopefully that's the case. If it's going to be sideways, so be it. Maybe we have a range trade here. I'd still buy low. I'd still buy low. I'd still buy low. It's still very well supported from these lows in COVID. So, $26 is really strong support if you ask me. But if we get the breakout city where we're coming above $36, greater than 36, there's not much stopping silver until we get to $48. That gets me pretty excited. So, and all this is like a wave. This is wave 1. This is all wave 2. This is wave 3 that I guess is done. And maybe this is a wave 4 that's going to start off for a wave 5. So this is why I'm bullish on silver. I think we can get up to a 5th wave completion. And that puts us in between like the $46 to $48 zone. So I'm bullish on silver. Bitcoin's had a nice stretch this week. Bitcoin broke on Sunday to Monday. We broke this trend line. The first thing I did was I dragged a little fib on here and said, okay, well, if we're going to break this trend line, maybe looking for a bit of a pullback to add some more exposure. And right now we have a low and a high. If it pulls back to a 382 to let's say a 786 window, looking to see if price will bounce in here or bounce in here or come back to the lows. I don't think we're going to come all the way back to the lows. We might actually just go higher. And if we do go higher, I wouldn't be shocked. I wouldn't be shocked if we come back down. Okay. So I'm not getting super excited on Bitcoin. I'd rather see this thing pull back first and find some support that we can buy and try to get this back up to highs. Because the nice thing on this is we did sweep these highs. So we swept these highs. This is a nice little swing. Any type of pullback, I'm liking long on IBIT. And I like it. I like it enough so that I might even consider buying a like synthetic long. Like I'll buy a call and sell a put and be synthetic long, lower the cost of the trade and try to take that as if I have 100 shares and do it for a fraction of the cost. I still have shares. IBIT I've got a pretty good chunk in. Overall, I think I have like a couple thousand shares, maybe 300, 200. Yeah, 23. I've got almost 2,400 shares. So I've got a little exposure there and benefiting from it. I want to see some more upside, obviously. So there's room. If we get up into this area, I'll have a decent chunk of profit. It may be in my interest to protect some of that or trim some of the exposure. But if we also make higher highs, then I got to be excited for like a measured move. Where could that be? Well, if we take this low pullback, if this pullback is only to 38%, I'd be looking at like 160,000 on Bitcoin. Based on this first big swing, if this is a 382 consolidation, it's not going to be perfect, but if this is wave 3, wave 4, wave 5, we probably have like a 130 projection here, but bigger picture could be, another pullback, pulls back again, and then starts wave structure back up to 160. So I could see legitimately this year like a 130 target and potentially a 160 target if this thing really gets legs. That would make trading pretty exciting. Despite how difficult the equities market has been, you'd have some real all-stars if you're having an exposure on gold, silver, Bitcoin. That could be a big assistance to the portfolio performance this year. Watching MicroStrategy, we've got some resistance at the 375 zone. This gets called away in June if it stays above 310. So there's my chart alarm at 310. If it gets up above 390, $400, I'm going to take some profit on a bull call spread. Do I prefer GBTC over ETH? I'm not touching ETH. I think Ethereum is still a wait and see. There's just, I'm so not interested in Ethereum compared to Bitcoin. GBTC, I don't even like this. Like GBTC is okay, but honestly, I think that IBIT is a better trade. I think it's a better trade. IBIT is number one cheaper. It's $54 versus $78. And I mean, this is BlackRock backed versus Grayscale. So cheaper cost structure, better spot price, and different expense ratio. So I personally I like IBIT if I'm trading, a securitized version of Bitcoin. Copper, pull full profit here. That's good. That was full profit. Made about $1,200 on copper. Japanese yen pulling back. I'd mentioned in some of my currency analysis earlier today, possibly like Aussie yen, CAD yen, New Zealand yen, dollar yen, offering some pretty good upside on those currencies because if the yen is going to drop, then all those pairs were retesting highs on the Japanese yen futures, but that's lows on those currency pairs. So Aussie yen after that big August 5th bottom, coming back down to retest the lows, there's a good opportunity to be long and have like pretty low risk for a high reward trade. So that's Aussie yen, CAD yen, New Zealand yen, dollar yen. Euro yen didn't really cooperate because the euro was so strong with the dollar being weaker. So the euro yen was very different. But yeah, I mean, you've got some good looking asymmetry trades on currencies with the yen if you're buying those lows. FXY still waiting. DAX, jeez, man, this thing hasn't even pulled freaking back. So there's your one opportunity to buy a dip. It's like, well, we went down like 16%. Gosh, 20, 22, almost 21.5%. Wow. And it's just climbing back to the highs. FEZ, I mean, the good thing is I've got some puts that are looking good. I have shares of, did I buy shares of I don't think I bought shares of FEZ. FTSE, back above the trend line. I was looking to see on the DAX if we get a pullback. So a low to high, I was waiting for like a flag pattern. It's just like, nope, we're just going to gap higher and go higher. FTSE, Argentina back up near all-time highs. China is hanging in there. I think a pullback on China still looks attractive. Brazil making a big old comeback. So I'd like to see if Brazil can get above this 200 moving average. ILF is Latin America. Ooh, hey now. Hey now, what's up with ILF? That's looking pretty good. So ILF. Did I not trade ILF? Son of a biscuit. I guess it is at EWZ. EWZ is flat. But share wise, 1, 2, 3. I've got some shares in this one. Break even around $28. 34. Oops. 34, 34, 100, 35, 100, 100, 100. So about 503 shares. Yeah, about 503 shares of EWZ. And the nice thing is 500 shares. I'll just do the numbers on this. Let's say we get up to $29 to $30. We look left on this chart. Is it possible that this runs in any way, shape, or form towards something like this? Big old trend line break, holding these lows. Is it possible that in the emerging market world that things start to look a little bit better? I mean, here's a high at 30, almost $37, $38. Here's highs way the heck up here at 55. It's like, I don't know. We'd have to have a monster move to the upside, but still, it's like I'm pretty much buying at the lows, and we'll see if that sticks. Because if it does, I think I could turn like a 50%, 100% mover. It wouldn't be bad on ILF or EWZ. Mags on the daily, coming back to that 200 moving average. This is another reason with earnings next week. I think if Apple, Amazon, Meta, Microsoft have strong enough earnings next week, we probably still drift up into this 200 moving average. If we are above this support level, so that's a good sign right now. If we stay into this kind of drift zone with a little bit of follow through into the 200 or into this first pullback zone, I mean, if I'm going to say, hey, look, there could be a sell opportunity on mags again, it's probably right there. And it's like, do you really want to sell it? I mean, if mags came back down to revisit the trend line or revisit the lows, probably more interested in getting long mag 7 again. But if it's just off to the races, well, that's why I sold a bunch of premium. Okay, so there's your Apple, there's your Amazon, there's your Broadcom, there's your Google. Google faded a little bit today, but earnings were good, so hopefully it just hangs in there, maybe a gap fill, but still maintains support, gets up to the 200 moving average. Let's see if there's some follow through next week. This is going to be really key. If there is price, if there's a gap between current price and the 200 moving average, I'm looking to see if next week we can still get there. If we can still get there, that would be this kind of key level of resistance, and that's on the SPY, that's on the QQQ, that's on a lot of Mag 7 stocks. I mean, we still have room in Meta. Can we get back to the 200 moving average? There's still room to go up next week. Microsoft, still room to go up next week. Netflix, way beyond the expected move. So we took a nice. I mean, it was a small win on Netflix, which kind of sucked. But I had the expiration out to next Friday, so that's my bad on the timing. But we still made a nice little 15 to 20% winner. Nvidia doing better, still has room to get to the 200 moving average. So again, like a little bit of movement could help. Broad market wise, like it could benefit from Mag 7 doing well. Tesla's up to 284. I mean, it was crazy. Like literally a week ago, we're down to 220. The stock is up $64 in the last like 5 trading days. So very volatile. And again, I think it was because it was overcooked, overdone, beat up like crazy. Even with the earnings being so bad, it was the opposite reaction, which I'm kind of happy, and was able to flip this for a couple times for some income. Berkshire Hathaway not quite at the all-time highs, but watching closely. I don't know if I'm going to see it sustain a high. It might actually offer up a trade to short, but I'm not going to. I don't want to short it. Bonds. This is 1 and 3 year up. Bonds 7 to 10 year and bonds 20 year up. Fed funds rate. We've got a May. It's going to be May 7th. May 7th Fed rate decision. They're not going to do anything. That's probably the percentage right now. Is it's still a pause. I don't believe this at all. Caving to Trump's trade war strategy. I don't know about that. What was I going to do? Oh, FOMC, the CME watch tool. Let me guess. FNGA is double leveraged. There you go. Yeah, why not? Get long triple leveraged. No need, man. Because if you don't time this well enough, you're just going to lose. So plus is $395. Like, I'm not that interested. Like, I mean, I've had this question for years. It's like, why don't you trade this double leverage, triple leverage? I don't do that. The price structure on this every single day, if you hold this and you don't get immediate, if you don't get immediate direction going your way, you will end up losing on these trades. If you ask millions of traders that have tried leverage ETFs, you're probably going to lose on those trades if you're not beautifully timed on these positions. So, yeah, I mean, I'm not crazy bullish on mags. I like mags. I think that's a pretty good ticker, and it's single leveraged. Look, you get enough leverage using options. I don't need to double and triple that and try to time this thing and also lose based on the end of day NAV. So, anyway, not going to be my choice. Fed Watch tool. So probability for next month is a 91.1% chance the Fed does nothing. Inflation numbers still look pretty good. June is expected to be that cut. Right now, the edge is about 20%, so 57.4% probability of cutting rates by 25 basis points. And then in July, the next month, same thing. It could be a pause, like maybe it pauses 41% versus 47, but I mean, it's leaning towards another cut in July, and then leaning towards another cut in October and another cut in December. So 1, 2, 3, 4 cuts for the year. We'll see if it gets there. What is that? And again, I keep asking this, but like, what does the cut cycle do to the bond market? Does it do anything to yields? Does it bring yields lower, or does it let yields stay sticky and all of a sudden you just don't get as much money as what you did? If you're going to a bank trying to hold cash, your high yield savings, your money markets, your CDs are all just going to be worth less for locking up your money for 12 months or whatever. So I mean, it's good in theory, but if the bond market, yield market doesn't cooperate, it's kind of pointless that the Fed's cutting rates. I mean, it's like they cut rates and they can obviously service their debt a little bit differently, but if they're servicing at like the 10-year yield, and it stays sticky, that's not good. So anyway, but 4 rate cuts are expected. Okay. All right. What else? Did rates, did currencies, did gold, did silver, did dollar. Schwab dividend, Schwab growth. Schwab growth looking pretty good. Schwab dividend hanging in there. SCHY, this one's got to be doing okay. SCHY is oh, yeah, baby. Let's see what we got here. SCHY. Okay. Up $700. Got some shares. So, I mean, not a massive move, but enough to get me a little bit happier. So, I've got some shares of this one. 200, 100, 200, 200, 200, 200, 100. So 1,700 shares of SHY. This is a mostly Europe and in Asia instrument. So I just marked this at an all-time high. If I get up another dollar 20, it's like, all right, that's fine. Is this the sign of like the big non-US performance? Maybe. And if it is, hopefully I benefit from that. Another way that I'm trying to be diversified this year is having some non-US exposure. It's not nearly as liquid. I mean, that's one reason it's like I'm not in all these crazy like non-US ETFs that I had a screenshot from a Bloomberg terminal that's just performance this year has been lots of European ETFs. I want to say like I don't know if it was Portugal, Croatia, like um, I don't know. I can find it. Let me see if I've got non-US. I've got an image of it here somewhere. Non-US plays. Here it is. Yeah, so we've got Poland, Austria, Greece, Spain, Germany, Colombia, Chile, Italy, Sweden. All these non-US performers doing pretty darn well. Now, granted, this was before Liberation Day. So they've all had a massive disruption, but there's been resiliency in all of them. Like the big drop we had on that kind of systemic week of like the, April 7th and 8th, like everything was down, right? It was like the 4th, 7th, and 8th, everything was down. After that, see a little reflexivity in the markets and they snap back. I'm not all in on non-US. I mean, these are not as liquid. I like to trade options. These are not as option friendly as what I'd like them to be. So I don't trade a bunch of them. But they're there and it's like, yeah, I mean, some exposure. So I like the mix of them as opposed to like, I'm going to buy everyone individually, right? I'm going to buy EPOL. I'm going to buy, GREK. It's like, I'm not. I'm going to get the mix. I'm going to trade the Eurozone as a basket. I'm going to trade China as a basket and, trade like Latin America as a basket. That to me is okay. So if I get some of that exposure, cool. But so far, so good. And let's see. I mean, that's the response I'm talking about, right? Look at how this was up to start the year. I mean, this thing was up 12% to kick off the year. That's a heck of a start for non-US, outperforming the S&P. And then all of a sudden, this thing dumps 10.7% and then responds to higher highs. So what a crazy, ugly rotation that was. But still, we're back up to fresh highs, which is kind of nice. So year to date, it's doing okay. Year to date's up about 12.24%. And if there's more upside, great. And that would be like the great rotation and the big outperformance of non-US versus US. All right, we have one more minute. Let me check on one trade here before we close. SPX, my bear call looking good for full profit, and my waterfall is still fine for next week. My butterfly is, so this is a wash. I did this intentionally. I took a debit spread. I took a credit spread. I'm going to wash these out so I can still keep my like 110, 120 bucks today from daily profit play. But in the next minute, if we shoot up to 55.50, like this trade could cash settle. Probably not going to. So more than likely, this is a wash. And then I've got some waterfall trades for next week. So let's officially wait for the close. We're at 55.25. There you go. Closes in. So loss in the butterfly, win on the bear call. That's a wash for zero. Pay some fees. I'm out a couple bucks, but overall still made about 120 bucks on SPX today. Overall good day, up about 18 grand. P&L anywhere between 125, 130. So back in the good side of the portfolio where I'm up about 5% year to date, and it's been a journey. say the least, and we'll keep grinding. So, all right, I'm gonna let you go. I got to jump into another class, my Project Options Edge class kicking off. I'll send um, the Zoom session link into Telegram, and have some exciting stuff in the works. Hopefully, I will have. I get a lot of questions on, Chris, how do you find trades? I've heard about all these trades that I'm not seeing this in, this one strategy I have, or this one service I have. How do you take these trades? I've been working on a master dashboard for a couple of months, and I think you're going to start getting some samples of it in the next few weeks. So stay tuned. I'll drip that more into Discord and into my Telegram channel and whatnot. So just keep an eye out for that. But I'm excited for it. There's a lot of great logic, and it's how I find trades, in addition to the very mechanical things that I run in all my services between daily trades and weekly trades and swing trades and things like that. So, all right. How do you decide to buy a dividend stock and hold? I was considering Heinz of the 5.32 of 2029s. I mean, sure. It's what is the ticker for Heinz? KHC. I mean, here's what I would say. It's the same reason as like MO. I mean, Heinz at $29. I would say if I'm going to buy some shares there, I got to be willing to buy some shares here as well. So, I mean, it's here's the difference. Heinz is very reliable, right? I mean, so is MO. So is, I mean, I'm trying to think of some dividend stocks off the top of my head. I mean, Walgreens was reliable until it wasn't. They all of a sudden did away with their dividends. We're back up to $11 on Walgreens. I'm still sitting on some shit positions there. But KHC, it's low enough. I mean, let me take a look here at fundamentals. That if I bought a chunk, right? So think about it this way. Whatever you invest right here is probably going to make a pretty safe 5%, right? But if the price goes down, it's a wash, right? I mean, what happens if price drops, to 27.49? You're down 10% in the stock price, and you're keeping a 5% dividend. The idea with a lot of dividend stocks, in truth, is to kind of stay break even. That's kind of what they do. It's preservation capital. It's low beta. It's a non-correlated asset. So I mean, you look at the facts between this and S&P. It's a negative 0.4, negative 0.04. So it's not correlated with the S&P. So if the S&P is up or down, KHC doesn't even matter. It's going to go nowhere because it's very low beta and it's not correlated. So that's kind of a good thing. But like I said, I'm looking at prices. If I buy some here and I buy some here, I've got to be prepared for about a 30% drawdown in the underlying stock price. Okay. But if I buy here and I buy here, let's say that this is offered. So I buy it at $29.58. I buy it at $20.38. Well, my break even is going to be in between. Now, longer term, if I had a position where this is my break even, let's say this is my break even, and Kraft Heinz over the next 3, 4, 5 years does actually go back up into the 40s. Well, now we're talking the best case scenario of a dividend stock that is also appreciating in price by almost 100%, right? So that's the plan. It's like if you're going to stay with a dividend portfolio or stay with dividend plays, you want a dollar cost average into them, because if price is going down, if I just held at $29 and the stock goes 20% against me, 30% against me, I'm not going to see the benefits of having a dividend. I'm just letting money sit and maybe get a dividend that's taxed while watching the underlying price underperform. But if I were to dollar cost average into this, if it goes up and I keep a dividend, or it has a little bit more of a downside and I can just stay with it, and this has upside, well, that's obviously a great combo. And that's like the value trade discussion. Value plus dividends, if it was 26 to, let's say, 43. Okay, so the stock goes up 65% for a gainer. So your position, let's say you invested $10,000. Well, $10,000 is up $6,500 on top of a 5% kicker every single year. Not bad. So that's the beautiful thing. But like I said, you just have to be prepared for these to also run against you, and continue to kind of allocate into it. So, there's an easier way to do it. Instead of trading individual stocks, you can do it with something like SCHD, which is a dividend-based ETF. And this one pays about a 4% dividend and has a little bit less fluctuation because it's also a diversified basket. So this is why I like SCHD. For a dividend basket, SCHG is a growth basket, SCHY is a non-US basket. So Schwab has some decent ETFs that I like. But it's a good thought. So yeah, I mean, Kraft Heinz is fine, but I would be prepared for that thing to come down to like $20, $20 to $21. Okay, I'm gonna go. I'm gonna jump into my 4 o'clock class for my Project Options Edge. Thanks for being with me here today. CAG, what's CAG? ConAgra. Oh my God. I mean, maybe. Same thing. It's like ConAgra, if I could buy this thing in the low 20s, I'd buy it in the low 20s. So let me take a look here. Let's go to KHC and see if fundamentally it's undervalued. So Snowflake looks pretty good. Way below estimated value. Earnings forecast to grow. Good value. These are good. These are attractive, right? 12.9 price to earnings, not too high. Fair value, 90. It's like, look at the stock. I mean, are we ever going to $92? Maybe. But even if it went from like 29 to 40, that's still a great trade. 21 to 40, that's a great trade, you know? But you got to be willing to ride these things out. So if you're willing to put in chunk 1, chunk 2 at some key levels, then if it goes up and you get the benefit of the dividend, not a bad trade. So ConAgra, let me look at it real quick. So CAG. Okay, a little bit less attractive on the Snowflake side. Dividend not well covered, high level of debt, profit margins lower than last year. Still way below estimated value. Earnings forecast to grow. Price to earnings a little bit higher. But I mean, 2 to 3x, 70% undervalued, like impressive. Still, compared to its peers, though, Hormel, Campbell's, I mean, ConAgra, I'd say, is a little bit overvalued compared to others. So, I mean, to me, it's like Kraft Heinz is a better trade, maybe even considering like a Campbell's. Anyway, it's a dollar cost average thing. Like I know financial advisors that run dividend portfolios, and that's what they're always doing. They're just allocating, and they just want the dividends to kind of help you break even. And then if there's price appreciation, yippee skippy. So I do think that because growth has performed so well, that there are going to be opportunities for rotation into more defensive plays, especially if the markets don't cooperate to nothing but upside. A downturn in the markets, a severe downturn in the markets, will play into a value investor's hands. So it could be ugly. It's not going to be fun either way. But a value investor that's buying things that are dirt cheap and undervalued has a much better upside potential than somebody that's buying high valuations that can't protect the portfolio. So I'm going to put in, I don't know, KHC actually just caught my eye. I've been in it, in and out for a while, but I think KHC is decent. I'll take another look at some dividend plays for next week. I'll run a couple scans on that. Food and Water Essentially Company, BTW, China cancel huge order pork. YMAX, Title Trust, Yield Max Universal Fund Option Income. No. This right here tells me all I need to know. This is a BS price action. Like you want 64% dividend, you're basically going to watch this thing erode to zero. This is the same thing as BITO with Bitcoin. It's a 60+% dividend. So people think like, oh, dividend, right? But watch what BITO does compared to Bitcoin. It goes down, 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 down. No, I'm not like yield max to me is a freaking trap. I think it's a good way to attract funds, but it is nothing more than just a buy and hold. I don't think it's going to break even. I think you're going to lose. I think yield maxes are garbage. So, and this is why. Do you want to put money into something where like, hey, I bought this thing at $16. Well, now it's down, 10 to 20%. You're never going to get back to break even based on the way this thing has to reprice every month. Possibly every day. It's like I don't like this stuff. Leverage ETFs, leverage instruments, yield max. I think they're really shady. I never see price go up on these instruments. So anyway, Michael, I told you yesterday, dude. I like Pfizer. I hope it goes up. I have like thousands of shares in Pfizer. I hope it stops sucking. I want it to go up. So I'd like to see Pfizer back into the low 30s, mid 30s. Dividends fine, but yeah, it's like we're at $23 and I'd love to see it get back into the 30s. Pfizer, we've got a decent dividend. It's fairly reliable. Fair market. I mean, there's all sorts of good upside to it, but it's just like anything else. There's no guarantee. It checks a lot of boxes, but we've got some risks. Price to earnings is pretty cheap, not terribly expensive, and fair value. It's like, look, I'd be thrilled to see Pfizer go to $70, but I'd be happy if it goes to 30. You know, so I mean, if it goes up $7, $8, that's good appreciation plus a dividend. That's a great trade, but it's not going anywhere. And until it does, it's like it's dead money until it tries to change structure. So I'm not like super bearish. It's already, in a terrible a drawdown, but I'm also not like going to hold it until it's $70 again. Unless Pfizer says, look, we're only going to focus on cancer and weight loss. And that's all they did, then maybe Pfizer zooms to infinity like Eli Lilly did. But I don't know. I mean, it's a huge pharma company, and I'm sure there's all sorts of crap going on, but I just think they need to kind of pivot into what the world wants. And right now, that's probably whatever. It's probably tough competition, and it's super expensive, and there's lots of barriers to entry. But Pfizer is a established brand, and I think they're solid dividend, but a lot of debt, not well covered dividend, unstable. So this could all change. But I think if you give it a chance, like it's been. I mean, the fact that it's lower than COVID's lows, that's why I got attracted to it in the first place. So this is what made me want to say, okay, well, I think we can build something here, and hopefully eventually it just breaks this freaking structure. The reason it sold off because Kramer called I mean, I think that's absolutely the opposite. If Kramer said Pfizer's dead money, then I want to buy Pfizer. Kramer's like literally an inverse ETF is built to trade everything against him, and it's been up like 60% every year. Last year, the anti-Kramer ETF was up like 60%. The Pelosi ETF tracker was up like 60%. So, I mean, yeah, Kramer can talk shit all he wants about Pfizer, but if he says it's dead money, then I'd actually like to buy it because I feel bad for the guy. It's like I think he knows his stuff, but the market clearly does an inverse on Kramer, which is wild. So, anyway, all right, I'm gonna go. I jump into another class. Happy Friday. Have a good weekend. See you. Bye.